You know, when you hear the term AI in finance, it's so easy to picture some sci-fi blockbuster, right? But what's the real story behind all the hype? Well, in this explainer, we're going to cut through all that noise to see how artificial intelligence is already changing the world of money, from your own bank account all the way to the trading floors of Wall Street. I mean, this is the classic image that pops into your head, isn't it? The all-knowing machine that starts out as this trusted partner. And then, well, you know how the rest of that story goes. This tension, right, between a super powerful tool and a potential threat, it's the perfect way to frame this whole conversation. So, okay, let's pull way back from that Hollywood fantasy. In the real world of banking and investing and insurance, what is AI actually doing? Let's dive in and see how it's being used right now and what that really means for the future of the entire industry. To answer that, we first need to get a handle on where this all even came from. We're going to start by taking a quick look back at the history of tech and finance and lock in a solid, no-nonsense definition of what AI truly is. When you look at this timeline, you realize something pretty important. Finance has always been a technological arms race. I mean, from the very first stock ticker way back in 1867 to mainframes and databases in the 20th century, the industry has constantly been on the cutting edge. When you see it like this, AI doesn't look like some sudden revolution. It's just the next logical step in a very, very long trend. But what do we really mean when we say intelligence? Well, the whole idea really goes back to Alan Turing in the 1940s and his famous Turing test. The test was pretty simple. If a computer could have a conversation with you so well that you couldn't tell it was a machine, it passed. And this gets at a really key idea. AI isn't about consciousness or feelings, it's about performing tasks that up until now have required human brainpower. All right, with that definition in our back pocket, let's look at the sheer scale of the AI market. This is where the numbers start getting truly mind-boggling. Just look at these forecasts. They are all over the place. We've got projections as low as $37 billion and as high as $8 trillion. And nope, those are not typos. This huge difference really comes down to one simple problem. How in the world do you define the AI market? So why the huge range? It's because AI isn't just one single thing. It's what you'd call a foundational technology. It can be applied to pretty much every industry you can think of, from healthcare bots and self-driving cars to entertainment and, of course, finance. So how you draw the circle around that market is going to dramatically change the size. Okay, let's move away from those massive, abstract market numbers and see how this technology is already showing up in our everyday financial lives, a lot of times in ways we don't even notice. You've likely interacted with financial AI without even realizing it. That customer service chatbot that helped you with a simple question, that's AI. The fraud alert you got from your credit card company, yep, that's an AI algorithm that spotted an unusual spending pattern. Beyond that, it's also powering robo-advisors, executing trades automatically, and even analyzing super complex legal contracts. And robo-advisors, they perfectly capture one of the biggest shifts going on. They make wealth management way cheaper and way more accessible for everyone. But, and this is a big but, there's a crucial trade-off. A human advisor has a clear legal fiduciary duty. That's an obligation to act in your best financial interest. But can an algorithm truly be held to that same standard? That's a huge legal gray area that regulators are still trying to figure out. And the demand for these services is just undeniable. When the investment giant Vanguard launched its hybrid robo-advisor service back in 2015, it pulled in this much. Over $21 billion in assets almost right out of the gate. But that was just the beginning. By early 2018, that number had absolutely exploded to $100 billion. That's not just growth, that is a massive signal of a fundamental shift in how people are choosing to invest their money. But there's a catch. The original vision of a purely automated, hands-off advisor, well, it hasn't really happened. Turns out that when markets get choppy and things get scary, people still want the reassurance of talking to an actual human. Most of us just aren't comfortable without a person somewhere in the loop. Now, beyond the consumer tech we've been talking about, AI is also being used as a powerful and kind of secret weapon by some of the biggest players on Wall Street, especially in the world of insurance and at elite hedge funds. This chart right here reveals a truly staggering amount of wasted potential. Insurers collect just enormous amounts of data, but studies show they only use about 10 to 15% of it. That leaves a massive 85% just sitting there, completely untapped. which is basically a potential gold mine for AI to dig through for hidden patterns and risks. And because of that, AI is now being deployed across the entire insurance lifecycle. It all starts with underwriting, helping to analyze all the data from applicants. Then it's used for risk modeling to predict future losses. It helps speed up claims processing so you get paid faster, and this is a big one, it can detect really complex fraud patterns that a human adjuster would almost certainly miss. And in the super high-stakes world of hedge funds, AI is now absolutely essential. Over half of all funds use it to help make investment decisions. Firms like the legendary Renaissance Technologies are famously secretive about their methods. But one thing we do know is that they use textual analysis, using AI to read millions of news articles to generate trading signals in a fraction of a second. So after seeing how AI is being used today, what does it all mean for the future? Is this really just a simple story of humans being replaced by machines? Well, the reality is a lot more nuanced than that. It's really important to remember that despite all the sci-fi hype, the real business case for AI is often, well, pretty boring. It's about efficiency. An AI chatbot works 24/7, it never calls in sick, and it dramatically lowers customer service costs. This isn't about creating some kind of super intelligence, it's about creating a super efficient workforce. And this leads to what a lot of people believe is the most likely future. Not human versus machine, but a bionic model. It's a future that combines the best of both worlds. You let the algorithms crunch massive amounts of data at incredible speeds, while humans provide what they do best: judgment, trust, and handling those complex, tricky situations. All of this brings us to the ultimate question for the future of finance. Will this incredibly powerful technology allow the biggest firms to build a lead that no one can ever catch, or will it level the playing field, allowing smaller, more innovative companies to compete? That, right there, is the multi-trillion-dollar question that's going to define the next decade.